Hey there, welcome Bob to the Canadian Wealth Secrets podcast. We're excited to have you on here today. Do us a favor, fill our audience in. Tell them a little bit about yourself, where you're coming from, and how you got into what you're doing.
Oof. How much time do we have on this podcast, guys? I'll give you the short version. I'm actually coming from Peterborough, Ontario, born and raised to a certain extent. Wasn't necessarily born, but was raised here. Spent my entire life in Peterborough. My wife's family is from Peterborough. Went to university at Trent University
Hmm.
for business administration, which is where I really found, my passion for entrepreneurship, but also the fact that I had this secret skill that maybe differentiated me, which was on the accounting side of things. So kind of paired those two things out, built a business in Peterborough and started it in 2008 with just myself and one other employee. We're now 98 as of the time of this podcast, serving essentially the business market with CPA services, accounting, tax, bookkeeping. We have a law firm that we've started as well to help support with the professional services side of things, and business advisory, CFO services to entrepreneurs, small businesses all across North America. So we have Canadian tax and US tax, but predominantly our clients are in Canada. We're one of the fastest growing companies in the country, according to the Globe and Mail, for the last 4 years. Lots of exciting things on the go. So that's a little bit about me.
That is fantastic and actually very succinct because you went through a very long, large, range of time. However, I must say, you certainly didn't seem like an accountant the first time I heard you on your podcast or in a webinar, because you were super interesting to listen to. Now, any accountants listening, I'm just kidding with you.
Yeah,
Man,
But
I'll take that as a compliment.
yeah.
yeah, there you go. It's awesome to have you on the show. I must say I've seen and watched from afar a lot of the work that you're doing, and I must say a lot of things we're seeing in the things we read, the things we try to do. John and I are not at 98 people yet, but we are working, we are growing, and we are scaling. But what I can say is that I really appreciate how you are really serving and aiming to serve those business owners, those investors, who is primarily who we tend to serve here at Canadian Wealth Secrets. So let's keep digging here. I suppose what inspired you to go from, say, business administration? You had a passion for entrepreneurship, and how did you reveal this secret skill, this accounting thing? Because I would argue that those three things often don't kind of jive, like oftentimes you have accountants are like, I just like dealing with the numbers, I want to put them together, and I want to sort of give them back. But you also have this passion for growing. So tell us a little bit about that. What has inspired you to do this work? And I guess what like how do you actually, in your business model, how are you able to provide all of these services? Is this like a fee-based service? How does that look like and sound like for someone who's listening who might say, you know what, this is exactly what I've been looking for?
Which question you want them to answer?
Yeah,
All of them.
this is great.
All of them.
This is great. And you know what I would say, 5 years ago, this would have been a really challenging sort of request to follow all of those questions and then circle back and answer them. But I'm going to do my best to hit them all because I think they're all really valuable. So starting back at university, actually, when I graduated high school, my plan was to be a teacher. And in fact, in high school, I got the teacher award, the one that said most likely to be a successful leader teacher. So circling back to my career now, I am doing a lot of teaching, which maybe was the intent of that to begin with. But when I got to Trent, I actually had one specific faculty member who maybe changed my perspective, and it was in a small business sort of enterprise global leadership course. The faculty member was Ray Dart, and he started talking about shifting perspectives and looking at entrepreneurship and the opportunities that were available there, and to make sure that you're not always just thinking the status quo, that you're always trying to challenge that and think in a different way and appreciate other people's perspectives. And that's where I really started to think, man, this entrepreneurship space seemed really interesting, and it kind of a little bit of the fire inside me, and maybe identified a little bit of the purpose of what I was intended to do. And at the same token, still going through the traditional courses in high school, I was really good at accounting. It just came natural. But also looking at, the thousands of graduates who are coming out of the exact same program as me in Peterborough, Ontario. How do I differentiate myself from this group of people so that when I graduate, I've got another skill set that they don't necessarily have? And so that's where accounting kind of came in, where I thought, oh, people are paying me along the way to help support them with accounting and tutoring and whatnot. And I thought, what a boring industry to maybe enter into, where that's very stale. But how could we enter personality, relationships, client-centered approach to an industry that's so dry and boring and traditional? So looked at that as a major opportunity and thought, well, if I could just focus on differentiating myself now, we can then use that skill set to continue to differentiate myself as we evolve through university. So that's, part of answering that question. Then we get into some of the services that we're offering. And we didn't necessarily start out by having all of the services that we offer. And, back in 2008, I was doing some bookkeeping, I was doing some tax, and I was doing some year-end filing. And one thing that I found
Sounds fun.
yeah, you know what? Honestly, I'll tell you, when you're dealing with essentially a problem, right? So what I consider ourselves to be here is professional problem solvers. And you have a problem that only a unique sort of skill set or educational background can identify opportunities and even read some of the jargon that's in some of these legal frameworks like the Income Tax Act. And I definitely, and this is with respect, have a lot of people in my office that I refer to as nerds, because they are, the technical interpretation or understanding well beyond most people. And we definitely have those people in certain areas like income tax, where, there's certain elements of legislation that's coming through court cases that they're constantly following to always find the next opportunity to save people money. So really back to the, it sounds fun. It really is enjoyable finding a problem, solving it, and adding value to someone's life. And, from our company perspective, we're on a mission to empower entrepreneurs with good financial information so they can change the world. Because, entrepreneurs, small business owners, investors are really the largest group of people making the most positive change. And if we can empower people to make confident strategic choices that make a positive impact on the world, like we feel like we're doing a lot in that space to open up investments, savings, and empower them to make this positive change in the world. So that's really, what has been exciting for us. So the evolution of our services is just kind of followed with we have about 1,400 business owners that we work with at this point. And, again, it started with bookkeeping, tax, and then it's evolved into more complicated, sophisticated tax work, legal work, business valuations, which is a new launch for us now when, you're coming to corporate restructuring or buying and selling a business. So we've really evolved that service line as our clients' needs have continued to evolve along our journey. And that's our plan, right? Is to continue to fill that void with any of the clients' needs that we have, that if we can make it a scalable, sort of viable solution to bring in the best experts, we'll do that.
Yeah. No, it sounds great. And that natural progression, is perfect for, the way I think most businesses evolve. And, if I rewind just a sec, you had, said that, talked about, teaching. Kyle and I are both, past math teachers, kind of, moved into this world. And, it sounds like you've never, you never had those golden handcuffs that we had, where we thought about, our identity for a long time was wrapped up in has been and still is wrapped up in being a teacher and being, leading first in terms of education first. And, it sounds like you felt, maybe you can shed some light on this. It's like, did you always think of yourself as an entrepreneur, or was there a moment where you're like, oh shit, I'm an entrepreneur? you know, like, because that was it, like, for us, like, we didn't think of ourselves that way until later on, and it was like already the business is rolling, and we're doing business type things, and we never really occurred to identify that way. And our
Mhm.
listeners right now are some of our listeners are in that process of like, I'm an investor, but am I really a business owner? I'm not sure. Like, there's often these like self doubts of like who we are and what our roles are,
Mm.
or how identify. And I don't know, did you always view yourself as like coming out, you're like, I'm a business owner, I'm an entrepreneur? It was that's just natural, or was there like a moment where it said like, oh, I'm an entrepreneur?
Yeah, and you know what? I actually just recently did a podcast that talked about the differentiation of my opinion of what a small business owner and an entrepreneur is, because statistically 95% of all business owners have zero employees, right?
Right, right.
And in that space, 95% of all business owners are under $100,000 in income. I don't necessarily feel like that is, unless, let me go back to my definition. So small business owner, I feel, is something where people are employing themselves to do something that earns them a living, and they do the same thing over and over again because it generates a sustainable sort of income in their family, but they're not looking at changing or creating something new. And that's where I believe the entrepreneur comes in.
Hmm.
Someone who's looking at transforming a space, creating
Hmm.
a product, creating something that doesn't exist, solving a problem that hasn't been solved. When I look at an entrepreneur, they're doing something that hasn't been done before. So when I go back to your question, did I always identify as a business owner or an entrepreneur? For me, it was always an entrepreneur, because I identified that I wanted to solve something that hadn't been done before. And you might say, well, Bob, you're an accountant in a CPA firm. That sounds like something that's been
I've
done
heard of that job
before.
before.
Yeah, I've heard of it. But looking at it and saying, well, I want to actually transform how this industry operates. So I want to do something
Hmm.
completely different. And it's not just that I want to, do the same thing over and over again, like the retail store that's down the road that has the same whatever products, solutions in there and never changes because it just works. That's a small business. But if you're looking at it and saying, I want to be the retail store that's innovating new products, solutions, adapting to the demands and changes of the market needs, and finding new solutions and bringing that to market, like that's more of the entrepreneur who's just trying to disrupt the
Right.
status quo, right?
Right.
So for me, it was always, how do I continue to disrupt this? And, one thing that I'm pretty proud of, because we've done some research on it, is that, yeah, we have come into a very traditional industry, an industry that does not have growth. You look at the traditional growth rates, it's right around zero in the public accounting space, right? There's a few firms that are high acquisition that are larger, like an M&P, for example, and they're usually around a 15% growth rate, all through acquisition of acquiring a zero growth firm from someone else. We are consistently on a 40+% growth rate, not through acquisition, through organic, and we are the largest one owner CPA firm in the country at
Wow.
this point. So doing things a little bit different, not buying into the consolidation of the large players that are just standardizing and making it boring, but how do we create something that's different, unique? We're very focused on the market that we serve, which is that small to medium sized business owner, and we're focused on things like marketing and teaching and educating and finding solutions that are outside of the status quo. So looking at that and saying, this is the entrepreneurial side of me that comes out now. I have had a few different conversations over the years with other CPAs who are in more of the traditional model, and I'm not well liked. And it's kind of
Disruptor.
surprising because, yeah, I'm kind of a nice guy. I feel like
That's
my
what
integrity.
all people say.
Yeah, right. Yeah, exactly. The mischievous ones. But integrity is a huge, huge focus for me, and it has been since I was 5 or 6 years old, because I wanted to build something that I would be proud of and that I could look at myself in the mirror and say, I did everything the right way. Even though I've had failures, I did everything the right way with the right intentions. And it's interesting, had a meeting with a fairly large local firm to look at acquiring them a few years back. And they said, we just couldn't do it because we don't like you or know what you're doing that's so different than what we're doing, that we just couldn't do it. And ultimately, you know, that was a really good indication that culture clashes would have happened. It probably would have been a real
For sure.
huge disaster to begin with. But, you know, that mindset of that. And also they said, you know, we're not business owners, we're accountants. And I was like, what do you mean? They said, well, we just do people's taxes and do their financial reporting. Like that's what we
Like
do. That's what
everybody else.
accountants.
Right. Yeah.
Yeah. And
We're not.
I'm
Yeah.
like, can you not just think outside of that for a minute? And they're like, no, this is, it's so uncomfortable. Like even talking with me was uncomfortable for them. And I was shocked by this because I thought everybody thought the way I did, you know?
Right.
Right.
So
Well,
interesting.
that's where you just slowly walk away, you know, you just kind of just slowly walk away and just run as fast as you can. But, you know, I think what you've done is you've done a good job in sort of unpacking the difference between what a typical business owner, small business owner is, which is essentially creating your own job and technically doing it on your own terms. But if you don't actually follow those terms that you've set for yourself, you stop making money because it's just you. Versus that entrepreneurial side. So, you know, what you just described is, I think, what the accounting industry in general sort of looks and sounds like for, you know, most people, which, you know, some might even call it like glorified bookkeeping. Again, I'm not saying it as a judgment. I'm saying it that it's become so volume based that a lot of times people, you know, business owners in particular, just feel like they're looking for a little bit of support. And what you're doing is you're doing what entrepreneurs do, which is, how do I create a unique offering that's going to differentiate us from the rest? And that to me was very clear when I came across, you know, your work and your podcast. And again, I hopped on that webinar. I was super curious to see. And essentially, you're offering information and you're doing it in such a way, it's very you know, Gary V-esque, or it's very Alex Hormozy-esque for those who are listening, in terms of the style. Not saying that you've got a band-aid on your nose like Alex Hormozy, but or big burly beard, but what you are doing is you're giving people as much as you possibly can in order to help educate them. And I think that's where we saw a lot of synergy between what you're doing in your space and what we're trying to accomplish as well. Because when I hop on a call with a potential client, you know, we hop on for a discovery call, we have a conversation, and they right away, I want to get it out of the way to say, like, we're not fee-based. We're not going to take a percentage of your asset. We're not going to do any of that. The only way that we are ever compensated is if there's a tool in which you require down the road that we can help you to set up. And then otherwise, we just work with you for free. And they're kind of like shocked. They're like, what is this? Like, that is our model. The beauty is, I've been on sometimes there's a client, we've been on for say 10 calls, and not, you know, we're just helping them along the journey. Guess what? They send the best referrals. And that's been a model that we've been doing in our world. So I definitely can see that, you know, there's a lot of this thinking, like the educating part is not only great for just helping and doing good. And I love your goal is really just trying to help, you know, financially arm and empower business owners so they can do the great things that they're intended to do. But it also, I mean, really just comes back to you. The universe just sends positive things back your way as well. So I'm wondering, when you think about, you know, your clients, I'm curious, we've got people listening, many are business owners, many are investors who are maybe thinking, do I incorporate? Do I not incorporate? Like, you know, what's the right time for me? What would it look like for someone who's starting, say, the customer journey, if they were curious about whether your firm could offer them some sort of value? I'm going to guess that you can offer them some sort of value, be it just education or otherwise. What does that look like for someone when they sort of enter into your world that maybe looks and sounds different than what might happen in another, you know, accounting firm, typical accounting firm?
First thing, before I even jump into that, I want to just talk on the offering value. And I spent quite a few years, I think it was 4 or 5 years, working with Tony Robbins and his team. And part of that was, so we were Tony's global accounting advisors, partners for Canada, which meant we went to his business mastery events 3 times a year, and they recommended us. Like Tony said, if you want to deal with the best tax experts and accountants in Canada, go talk to Bob and his team. Great. What a fantastic
Right.
endorsement from one of the world's leaders. But based on spending time with him, I learned so much from him, even just from his business mastery events. And not that it was life-changing information. It was just like hit you with it. Yes, you just need to do it. And,
Right.
one of the things he talked about was giving more value than anyone else and leading with value and helping people achieve something first before asking for something in return. And that's really the secret weapon to business success. And you guys sound like you're doing exactly that. And we try and do that as well, right? We're leading with offering as much value and insight as we possibly can to our business community. And then when it comes to needing a specialized service that we can support with, we're here to help support them. And so on one of those things, looking at a small business who's just getting started, or an entrepreneur who's looking at getting started, this is one of those questions about should I or should I not incorporate, that is maybe one of the most frustrating for me, based on the feedback that they get from different people. Because I feel like there's so much mixed messaging out there related to this. And there's a simple answer, and I'll tell you that in a second. But the mixed messaging that is out there based on people's, availability or willingness to support people in that space or offer that service, that's sort of outside of their normal day to day. And they change the answer. They give a frustrating answer so that people just don't move forward with it. And it pisses me off, guys. I'm not going to lie. We had the real estate community 2 years ago be able to incorporate for the first time. And before that, they couldn't incorporate. They were having to claim all their self-employed business on their personal tax return, rates up to 55%. Nasty situation. And then all of a sudden, they could incorporate. The laws changed. It allowed them to do it. And, people were coming to me saying, well, my accountant has told me that I need to have, $250,000 of income.
Oh my gosh.
To incorporate. And you're like, what the hell? That is not even a relevant statistic in any way. Even if that number is wrong, that's not.
Or
that's
your
not it.
accounting fees are just way too overpriced if that's
Like,
how much you need to save in tax, in order to make it worth it.
And at the same token, you're like, that person is saying 250,000 because they don't want to have to change the way they've been doing your stuff for the last 10 years.
Right.
And they don't actually give a shit if you're paying more tax or not, if they could save you money. And that, that part of my industry and my space is really frustrating, because we're so client focused, and we're not perfect in any stretch. Do we sometimes take long times to respond to emails? Yes. But always the intention of supporting our client is always going to be with their interest first. So if you're a small business owner and you're getting started and you want to look at a structure, the very first thing you want to look at is, what is the intent that you're trying to create with this business? Because if you're trying to build a business that's very successful, and is making a lot of money down the road, you want to look at incorporation immediately, as a very important fact. One, it's a financial investment and commitment to you in believing in yourself. Because if you don't take that step, you don't believe that you're actually going to be successful. So, if you don't believe you're going to be successful, this is not something you should get into, because it is hard as hell to create something that's successful. So if you don't believe in yourself, that's probably going to be challenge number one.
Like a sunk cost, right? It's like, listen,
Absolutely.
are you in or you out?
Like if you can't find $2,500 to get set up properly from day one, if you're not willing to invest that in yourself and what you believe that you can accomplish, you probably shouldn't get into this space, because it is not easy. Resilience is so necessary. And $2,500, that might just be something that if you aren't willing to do that, that's probably your sign that maybe self-employment or entrepreneurship is not for you. Take it a step further. If you are starting a business and you've got personal assets, you want to make sure that you're protecting yourself in the best way possible. By using a corporation to establish your business, you're able to protect your personal assets from your corporation. That is also something that's very important. As a $2,500 sort of one-time costs to set it up. It's like a lifetime insurance policy to protect the risk from your business, from your personal.
Mm.
Number three would be, and this is where we start to get into taxes. Is there a particular number where it makes financial sense from a tax perspective for you to be incorporated? Yes, it's when your tax rate gets above 12.2%. And you guys had talked about this before. It is a wonderful thing. And, we do want to spend time focusing on how we continue to enact that 12.2% rate. It shouldn't consume all of our lives. But when we're thinking of incorporating, if you're looking just specifically at a tax savings perspective, when your personal tax rate gets above 12.2%, you should incorporate.
Totally.
At any point beyond 12.2%, it's not going to cost you any money to have this corporation. There's lots of reasons. Canada Pension Plan contributions that a lot of business owners make. When you incorporate, you pay yourself a dividend versus a salary. You can save about $7,000 a year in Canada Pension Plan contributions, and this is where, opinions differ. I don't want to give that to the government. I'd rather hang on to it.
I say that so often. I'm like, listen, to each their own, but personally, I think I can do better with a very conservative asset if I really wanted to. Now,
Totally.
can I just sort of highlight, so you've been talking about that 12.2, we talk about it on the podcast a lot, for that active income. Where I hear and where we get the question from so many are those who are investing in real estate. And that, I'm sure there's a little bit more nuance there. And that's where I wonder if maybe, I use the word ignorance with respect, right? Sometimes people aren't aware, maybe they misheard, maybe they weren't sure. But like when we start talking about, say, earning passive income inside a corporation, there's still a lot of the benefits you highlighted, right? With, the liability protection and those pieces. But my rental property is not getting me 12.2%. So then now it kind of opens up a little bit of this, like, well, how many properties are you going to be invested? Like, that's where I think that discussion ends up, the telephone game sometimes takes over, right? And then a person hears that, and then they assume it's the same for my contracting business, or they assume it's the same, when in reality, it's like a really different game. I'm curious, when you're working with business owners, do you find that the whole active passive thing, I find this in general when we're speaking with people, it's almost like, most business owners assume it's 12.2% on everything and find out usually after they've been taxed a lot down the road as that passive income grows. Like, what does that look like in your world? And I suppose, do you have any sort of rules of thumb, or we call them Canadian wealth secrets, that, someone might consider if, maybe they aren't active, that active income? Because like you're saying, like active income, 12.2%, awesome. Like that is so worth it, especially if you're going to earn, more, more than you're earning, personally, to hit that same tax rate. So what do you say for those investors who are like, is it worth it? Do I do it? Do you have any rules of thumb or maybe things for people to think on?
100%. So I always like to start it off with maybe a tangent direction first, and then I'll jump into it. But, I think this ultimately comes down to the professionals that you work with, right? We've talked about the difference in maybe some CPA firms. You want to be working, especially if you've got anything that's outside of the box, which is real estate investing. It's outside of the box of a traditional sort of tax return in a bunch of different ways. But you need to choose an advisor who's willing to look at the outcome you're trying to achieve and find you a solution that will match your objectives. And instead of just saying, nope, passive investment, real estate income, you have less than 5 full-time employees, any income you earn is going to be at the highest tax rate inside a corporation, which is at 50%. That is the rule. But there's ways to make those rules work for us and get, the outcome that the clients want. So one of the areas that we can get into is actually looking at a different structure and creating property management related organizations or a second corporation, drive income into that, which has risk because you likely have multiple sources of income. You likely have more risk because it's a separate business. that we look at transferring some of that passive income in the property company into an active income into a management, property management related company. So looking at a structure, we can likely optimize that to eliminate those higher tax rates. So first and foremost, I think if you're in that situation, one, if you've got a property that after depreciation is making money, fantastic. You are in a great position.
Good problem to
Like,
have.
good problem to have. Likely you're in a position where you could refinance that property, pull out some equity, and reinvest in your next property and start the accumulation of some significant wealth there. Been there, done it. It works beautifully. You know, we've have hundreds of clients who do that too. It's great. At the same token, we want to eliminate that tax because it is nasty, and we can definitely do it because typically, if you're in the real estate investor space, you have other forms of income.
Right.
Typically when you're starting. So we can put that other form of income in another corporation, which is active. We can then charge fees to your property company, pull out that passive investment income, bring it into active. We just need to be strategic with it, and we likely have to have the agreements to support how that works. But
Right.
100% available
I love it.
and
I
an
like
opportunity.
I'm liking that secret sauce for sure. Now I wanna ask, where your plans for wealth growth come into play. So like business owners, small business owners, primarily the business is the sole, what possibly, like you said, there's real estate investing, but if you're running your own business at the same time, there's sometimes this waterfall technique that business owners apply to say, look, I'm generating a majority of my wealth through this active business, or maybe it's my T4 income, but then I'm now deploying it into other assets. Like for you, on your wealth journey, because I think our listeners just want to hear different perspectives. They want to hear different strategies. What are you doing? Like we share all the time what we do. And every guest we come on, we want to ask them, like, what is their strategy? Like what is your, your asset of choice? Or like, let's say you've got this active business. It's now spilling over top. It's like, now what do I do with this money? Where does it go next for you? And like, where does that kind of like that waterfall lead?
I'm guessing Bob's an under the mattress kind of guy. He's just like, just throw it under there. I know it's going to be there. No, I'm just kidding.
Yeah, exactly. Yeah, me and
He's a,
my
he's a
grandfather
shark.
both do that. Yeah.
Come to
Listen,
me.
I'm
I got
back
good
here.
rates. Good rates.
Yeah.
yeah, exactly. Hey, we do our legal team does help with private mortgages
Right.
to setting people up. So, if that's your under mattress money that's very legitimized,
Right.
hey,
Right.
it works great. The rates of return are awesome. Listen, in my approach to this is somewhat changed over the years too, and I think it's completely dependent on where I'm at.
Mhm.
Early on, I was taking my surplus income from my professional career in the business that I was building, and I was placing some of that in real estate investments. And I was using it as deposits to get real estate rolling. Once you get to a point in real estate, you typically don't need to continue to fund it anymore. It can somewhat self-fund itself. So that's
Mhm.
sort of where I'm at from a real estate investing standpoint. I don't need to go in anymore. I just let that asset portfolio kind of work itself. And at the same token, I use this phrase a lot when I'm talking with my clients. Don't kill your golden goose.
Right.
And the golden goose is always going to be your business. So, especially if you're looking at creating something. Now, before I jump into this, there are some stats. More than 90% of business owners who create a business never successfully exit. So, like, let's not put that as the be all and end all of being able to create a business and that's our exit strategy, because you've got to have a plan in place to be able to create a business that's got value and can be sold. So there is some risk associated with that, right? Like entrepreneurship, 50% of businesses fail within the first 5 years. Okay, we know that. 90% or 95% of all of those businesses that do succeed never have employees. Okay, so we know that. If you don't have employees, it's not really a saleable business unless you've got some
Right.
really good IP, because it's completely involving you. So we continue to get down to this small statistic of people who are able to actually sell their business. when I say your golden goose is the idea that it's creating you the largest return on investment that you're ever going to have is going to be in your business, or it should be.
Mm,
The reason that it maybe wouldn't be in some instances would be because you've pulled too much out of it and you haven't given it the oxygen it needs to continue to survive and grow and breathe, you know? So for me right now, we've kind of been in a situation where we've been all in on the business. So I've got a company, obviously, we're, you know, multiple 8 figures at this point. We've got 98 employees, but it needs every resource that it can possibly
of
take
course.
right now. It's like a
Right.
sponge. And to the point where, you know, in some instances, it doesn't even have enough resources that it needs with all the opportunity that we've created. So for me, I am all in on that particular position right now. I'm not pulling anything out because we've created something that's saleable, and we've also created something that has significant momentum, and
Mm,
it needs everything. So I think everybody's situation is completely different, but I do like to say, especially those people who are putting in the, you know, 40, 50, 60-hour weeks, don't kill the golden goose by pulling everything out. Don't let it die because it didn't have the resources that it needed to continue to survive. We have to plan that out. And then, you know, for the second sort of element of that, whatever you can pull out, if you can create it on a sort of fixed schedule so that you can pull it out regularly and frequently, the business can get used to that sort of resource being pulled out and put it into whatever investment makes the most
I
sense
love
for
it.
the individual. I do not want to be a landlord of a residential home that has an individual tenant who could be destroying my walls or who's going to call me and ask me for the plumbing questions. That is not where I fit in. That might be perfect for someone else who loves that. So you know, you have to have an element of self-awareness of what you want to invest in too. For me, anything that's extremely passive that doesn't involve my attention and has a fairly, you know, fairly decent rate of return or possible rate of return without me worrying about it, that's where I like to spend my non-business time.
I love it. I love it. So, you know, kind of working backwards, it's almost like you have, we call it the waterfall method, where you almost use some of that as almost like an expense to your business, right? Where you're anticipating, hey, this money is going out the door each month, and we work within it, but not so much so where you feel like there's not enough going on in there. And you said something else that's really important. I love the golden goose analogy. There is your business is something that you know really well. And if you've had moderate success, I'll say moderate because there's always an opportunity to scale up from where you are currently, but you've had some success in that business, you're probably, you know, that's probably one of the lesser risk assets that you could be putting money into. You have control over it. You get to, you know, what that money's going towards, unlike maybe some other asset classes. And for some business owners, you know, I say under the mattress, but for many though, they do want to be prepared for an emergency or for scaling or for something else. So there are opportunities, you know, to do things that are more liquid and available and still grow some wealth and have some benefits. So for example, we've helped some business owners with corporate owned life insurance, for example, with, you know, cash value and that sort of thing. So, hey, it's there to leverage against at any point. So a lot of what you're saying really resonates. What we don't advise people do is, hey, you're already in business, which is risky for some people to think about, right? With all those stats you just shared, you know, where do you want to take all of that money that's growing essentially your current net worth? Where do you want to put it so that you can at least, you want to essentially ensure that that capital doesn't disappear on you, right? It's one thing to
Mhm.
think about the return, but it's also to think about the preservation of that capital. You've got this wonderful thing going on. You know, we don't necessarily need to be the smartest guy in crypto unless you really like that, and, you know, and you want to become an expert in that. But, you know, to your point, we've done much the same in our real estate portfolio. You know, it does its thing. We continue to buy when it makes sense, but it's not sort of, you know, something that we want to spend all of our time doing. So this has been fantastic. I'm wondering, before we wrap this episode here today, you know, it is the Canadian Wealth Secrets podcast. You've given a ton of awesome wealth secrets along the path here, but I'm wondering specifically for, let's say, those business owners, investors, or maybe future incorporated business owners, What would you say is a wealth secret that you think would be a nice takeaway for some listeners here today?
I'll maybe give you two. One that's a very easy application, and I feel could apply to 99% of everybody, and then one that's maybe a little bit more sophisticated,
Mm.
and maybe for the more advanced investor or advanced wealth accumulation individual. So the first one is, as a small business owner, entrepreneur, whatever it is that we're into, where we're creating, a side hustle or a full-time business, pay your children. One
Mhm.
of the easiest deductions that we possibly can have in a business is to pay our kids. And, there's some rules associated with it. And the rules have changed over the last few years. We used to be able to pay dividends out to kids who weren't actively involved in a business. They've kind of taken that away, which we go, yeah, that makes sense. We were a little,
Yeah.
we were a little
You
aggressive with
caught
it.
on. You
Yeah,
caught
yeah.
on.
It was good while it lasted,
Yeah.
and we can still do it if we follow some certain parameters. But thinking of paying your kids, $15,000 a year, where they would pay zero tax on that, but you get full access to that deduction, is certainly very powerful. Especially, if you think of a sole proprietor, if your tax rates are up around, the 30% level, $15,000 of a deduction is coming back to you in a nice little way. And if anything, it allows those kids to pay for some of their activities with some of the cash that you're putting aside for them. So that's a
Or
huge
taking
one.
their parents out to dinner,
Or
whatever.
taking their parents out to dinner, or paying for private school, or paying for their sports, or whatever that is. We're paying for it anyway. We might as well put it into account and have that, get access to that deduction in our business. So there's one part of this too where the CRA says, yeah, reasonable compensation for reasonable work contributed. That means it's a full business deduction. Now, there's also an element of this where we could say, let's pay an unreasonable wage. And what's the outcome of that? It means that it's no longer a business deduction. So, for example, if I paid my kids an unreasonable wage and it was $50,000, and what that would mean is I would not get my 12.2% business tax savings, but I would not have to claim that $50,000 as income. My kids could, and they have no other income. So what happens is we transfer from my 50% marginal rate down to their 15% marginal rate, and we save the difference on our personal taxes. So yes, it's supposed to be reasonable, but if you don't, you just don't get a business deduction, which costs you the 12.2%, but you can also get that out at a much lower marginal tax rate. So there's number one for you. Number two, a lot of times we see business owners who've been really successful, they start to accumulate cash inside their corporation. And one of the fears is we don't want to pull it out because we don't want to pay tax. And I agree. Let's not pull it out. Let's leave it in there, invest it in whatever wealth secret that we want to take advantage of, but let's leave it inside the corporation. But one particular wealth secret that we found has worked very well is that if you have personal purchases that you need to make and you don't want to pay the tax on pulling that money out, what you can actually do is go and secure your corporate investments and get access to a personal line of credit with that security. And a lot of the times it's working with a private banking institution or arm of a larger financial institution, and being able to secure 70% loan to value of those assets to be able to acquire personal assets or to pay for personal expenses avoids the high amount of tax that we would be paying on that as a dividend distribution. So if you're in that space, that certainly gives us a lot of opportunity. I'm sure you guys would also look at that and reframe it and say, if we want to build a whole life insurance policy as well, invest in there, also get access to that leverage down the road, we could do that too. So there's different ways to do it, different ways to approach it. But as you start building wealth in your corporation, just know that if you do need some of those resources, there are ways that we can get access to them personally without paying the tax.
I love it. I love both of those wealth secrets. And I'm going to argue that the first one kind of had two to it because you talked about the
Well, maybe it was
unreasonable, which
three.
is great. Three is better than one, that's for sure. So, secret number two, I love your strategy. And, again, I know very quickly when there's an alignment in thinking, because we do absolutely leverage strategies such as what you've described, which I can imagine that we're going to have some clients coming directly from us to you, friends, in order to do some of this work, because, you know, what we pride ourselves in is being able to actually structure this with clients at that point. So like you had said, you know, for some people, it could be a permanent life insurance policy where, you know, the premium is high enough, retained earnings are high enough where that can happen almost immediately, like right away, or it can happen later down the road. And of course, doing all of the things that make this thing compliant and getting independent tax opinions and all of those things are really important. So I really like your secret sauce. That's a super advanced one. And if you're listening to this, friends, definitely reach out to us at canadianwealthsecrets.com/discovery. Not only will we take you on a deeper dive towards a strategy such as that one, but we'll also make sure that we get you connected with Bob and his team if you're feeling like, you know, my accountant is kind of accountanty and kind of bookkeepery and not very advicey. It sounds like Bob and his team could definitely be of service to you, friends. Bob, I want to thank you for being on the podcast. But before you go, hey, tell them, where can they find you? You've got a podcast. We listen to it. And I'm sure some of these listeners are going to want to listen to it as well. Tell them where they can find you and learn more about what you and your team can offer them.
For sure. So the easiest way to connect with us would be through any of the social platforms, but our website as well, which is govrocpa.ca. And any of our social platforms, we're at Gauvreau CPA. You can find us there. Follow us. Actually, we put out a lot of content, a lot of advice, like we talked about. We practice what we preach. So check that out. We also have a podcast called The Wealthy Entrepreneur. It's on all major platforms. Check us out there. Follow us as well. Again, just giving insights and value. And I think we're going to have a couple special guests that you may know as well joining me on my podcast here shortly too. So excited for that. And gentlemen, for our continued collaboration. Really great to be here.
We're excited for that too, Bob. And again, thanks for being here, and we'll talk soon.